Good morning and welcome to Charting the Markets on Friday, the 25th of August 2023. All eyes are riveted on today's Jackson Hole Symposium, and we will have the Fed Chair Jerome Powell speak at 3:05 p.m. London time, and this will be followed at 8 p.m. London time by the European Central Bank's President, Christine Lagarde, also talking to those who attend the symposium in the United States later on today. Now, obviously, we will get a better indication of what the Fed and the European central banks have in mind with regards to future interest rates, whether we will keep on having higher rates for longer, or whether, given the bad economic data and flash PMIs we had out over this week, we could perhaps see a pause in the rate hike cycle, especially in the Eurozone. So equity markets have come off ahead of the symposium, but I'll talk about these in a minute. And before I do, I'd just like to mention that earlier today we had UK consumer confidence out. It came in at a better than expected -25 for August compared to a forecast of -29 and a July reading of -30. But it didn't really help the British pound hold up against the US dollar. The US dollar is trading in 2.5 months highs and is appreciating quite strongly, as we will see in a minute on the euro dollar charts and also the cable chart. What we also had out is the final German GDP data out for the second quarter. And we see that the German economy is stagnating after having seen 2 consecutive quarters of negative growth, so it is still in a recession. And we also had the German Ifo Business Climate Index out, which saw its 4th consecutive monthly fall. So again, the German economy not looking as strong as some might have hoped. But let's look at the UK FTSE 100 Blue Chip Index, and you can see here on the daily financial bet that we are continuing to head higher, and we will probably see the first weekly positive close in about a month for the FTSE 100 later today, unless Jerome Powell were to throw a spanner in the works later on in his speech. So you can see here the FTSE 100 formed a bottom, bounced off this key support area made up of the March and July lows, which we mentioned at the beginning of this week, and then recovered and so far reached a high this week at 7,385. Now, this would need to be taken out for the next higher target, that is to say the late May lows and also the early August lows between 7,433 and 37 to be reached. So that is the next upside target if we were to manage to rise above 7,385. But we'll have to see whether that is actually the case or not. If not, we've got really good support, as I said, between 7,228 and 04. So these are the technical levels to watch out for the FTSE 100 over the next week or so. In Germany, as I said, Germany still stagnating after having seen 2 consecutive quarters of negative growth previously. And what we saw here is a very sharp reversal yesterday after a rally to 15,895 in the German DAX 40 index. And that was on the back of NVIDIA earnings coming in much better than expected, and the company also announcing a $25 billion buyback. And it drove technology stocks higher overnight and also at the open in the European session. But then on profit taking, we saw a lot of European and US equity markets actually reverse to the downside. And as you can see here, we fell yesterday with regards to the DAX 40 to 15,545, and thereby took out all the previous days' profits we saw this week. Now, this morning, despite the weaker reading with regards to the German Ifo Business Climate Index, the DAX 40 seems to be recovering some of these losses. But from a technical perspective, it doesn't really matter that much how much we retrace, unless we were to take out yesterday's high at 15,895 and rise above there. The downside momentum we've seen since the beginning of August seems to be in play and seems to be dominant. So if we were to fall through today's 15,000, yesterday's actually 15,545 low, then we would be heading back down again towards the July low at 15,455, and also the red line here, the 200-day simply moving average at 15,439. And these are basically the downside targets with last week's low at 15,469. So we've got a pretty good support area below Thursday's low in case we were to fall through there. But short term, as I say, we're currently heading back up again and are trying to reach the 8th of August low at 15,703. But much will hinge on Jerome Powell's speech at 5 minutes past 3 UK time later on today, and also probably for next week, more importantly, the speech by the European Central Bank President Christine Lagarde at 8 o'clock London time. Now, with regards to the US markets, what we can see here is that the S&P 500 has also fallen quite sharply yesterday, having risen in early morning trading to 4,474, but then it formed this bearish engulfing pattern, basically where you have the body of this candle, which is to say the difference between the open and the close, which previously engulfed the previous day completely, and that is a bearish technical reversal signal. So we've had a short-term reversal to the upside, which is now reversed back to the downside, and basically made us reintegrate the July to August downtrend line. And if we were to fall through the mid-August low at 4,337, and also the late June low at 4,328, then it is quite possible that the S&P 500 may actually slide all the way back down again towards the 200-day simple moving average here in red at 4,154. So we are not out of the woods with regards to the bulls on this trade. The bulls would be only back in control if we were to rise above 4,474 on a daily chart closing basis after the speeches given by Jerome Powell and Christine Lagarde at today's Jackson Hole Symposium in the United States. The US dollar managed to appreciate for another week and is now trading in 2.5-month highs on the back of flight to quality flows into the US dollar, and also as investors expect rates to stay higher for longer ahead of today's Jackson Hole Symposium speeches by Jerome Powell and also Christine Lagarde. And if we have a look at the US dollar basket, we can see this rise in the greenback since the mid-July lows, taking us, as I just said, 2.5-month highs to the 104 area. And so far we have risen at 103 to 103.99 on this daily financial bet. But if we were to continue to head higher, we would have the May high at 104.26 in store. So that's the next upside target for the US dollar basket. And interestingly enough, we managed to break above the red line here, the 200-day moving average at 102.78, having tried to retest it several times on the downside over the course of this week, but then we just continue to head higher. And as the euro makes up 57.6% of the US dollar basket, you can see the inverse of the previous chart here, and you can see that euro dollar has fallen through the red line, the 200-day simple moving average at 108.05, and has now tested the March to August uptrend line, which we tested this morning at 107.66, and there currently we are holding. So this is giving us some interim support. But if it were to be slid through later on today on those speeches or over those speeches by Jerome Powell and perhaps Christine Lagarde, we could actually be heading all the way back down again towards the May low at 106.36 if this uptrend were to be breached on a daily, and since it's Friday today, on a weekly closing basis, then the negative momentum of the last few weeks is likely to continue. For this not to be the case, what we need to see is a reversal above the 200-day simple moving average at 108.05 to be seen today, and ideally we would also like to see Friday's close, so a weekly close above that 200-day simple moving average. But even then, what we need to see from a technical perspective is a rise above the last reaction high, and that is to say Thursday's high. A reaction high is simply the high which is higher than the previous candles and the next candle's high. And this was made yesterday at 108.76. So if we were to manage to rise above 108.76, then we could see a consolidation phase and perhaps even a reversal in the euro dollar's fortunes. But right now, it looks more likely that further downside is in store for us with regards to the euro dollar currency pair. And euro sterling is looking quite interesting, because here we're seeing the forces of the weaker euro, but also of the stronger British pound. But over the last few days, the British pound has actually retreated versus the euro. As you can see here, euro dollar has been rising off its one-year low at 84.93 and has tested earlier today and yesterday as well the 55-day simple moving average at 85.82, which currently is putting a stop to the current advance, and we are currently stalling at that level. Now, if after Christine Lagarde's speech later on today at 8 o'clock UK time, we were to head back up again above this 55-day simple moving average at 85.82, we could be reintegrating the upper boundaries of this June to August sideways trading range for euro sterling, and that would mean that we could be heading back up again towards the June high at 84, the late June high at 86.58, and towards the 87 area where the July high was made. If we were not to be able to rise above the 55-day simple moving average, then we could perhaps slip back again towards the 85.50 zone, and we could see some further sideways trading in this currency pair over the course of next week as well. Moving on to the British pound, as I've just mentioned, against the US dollar, the pound has actually fallen quite strongly on that 2.5-month high on the US dollar basket. So basically the US dollar appreciating far more than the British pound can, and that's what's pushed the currency pair back down again to 125.61 on this daily financial bet, a low last traded in mid-June of this year. And as we can see here, the momentum to the downside has actually accelerated, meaning that the negative bias at the moment in this currency pair is likely to perdure, and it could, once we are taking out the early June highs of 125.44, lead us to fall all the way back down again towards the 200-day simple moving average at 124.01. So that's the next potential downside target for the British pound against the US dollar, now that we have fallen through the 126.17 mid-August low. If, and this is a big if, we were to manage to hold over the next few days in this current area and actually rise above the 22nd of August high at 128, only then could we have a reversal to the upside. But unless that happens, further downside looks to be likely to be seen with regards to the British pound against the US dollar. And this is despite this morning's UK consumer confidence coming in at better levels than expected. The rising US dollar has had a detrimental effect on a lot of commodities, except for gold and silver, which have basically maintained their bullish momentum and seem to be on track for their first positive weekly close in about a month or so. But before we talk about these commodities, I'd like to mention the price of Brent crude oil, because it has also fallen over the last few weeks. As you can see here, we've come off the $87.83 high per barrel, which we saw on the 10th of August, and have fallen all the way down to this week's low at $81.68, marginally above the red line here, the 200-day simple moving average at $80.89. But what we're seeing at the moment, it seems to be short covering. So traders who shorted the crude oil price over the course of this week, perhaps covering their shorts ahead of the speeches by Jerome Powell and Christine Lagarde later on today at the Jackson Hole Symposium. And this has led to the price of Brent crude oil to retest its August downtrend line. And so far we've risen to $84.18 right now, testing the downtrend line. This caps the Brent crude oil price so far. But if we were to break through there on the daily chart closing basis, and thus on a weekly chart closing basis, because it's Friday today, then we could be heading back up again towards the $85 mark and also retest last week's high. Well, actually, it was this Monday's high, excuse me, at $85.54. A rise above there would reintegrate the previous uptrend and mean that the corrective phase of the downside has ended, but only then would we see that. So as long as we stay below $85.54, it is possible that further sideways trading could be seen here with regard to the price of crude oil. Now, the gold price, as I've been saying just now, is on track to basically have its first positive week in a month. We haven't seen that since the July $1,987 per troy ounce high. And right now we are hovering above the red line here, the 200-day simply moving average at $1,911. But we are likely to close on a positive basis for the week later on today. With regards to next week, it looks as if further upside is possible if we stay above the 200-day simply moving average of $1,911. Quite likely that we will then be heading up again towards the 55-day simply moving average, $1,933, and perhaps even towards the $1,950 mark. So that is a distinct possibility for the next few days. And if you look at the silver price, the story has been quite similar here, but actually we've seen outperformance of silver vis-a-vis gold, because the price of silver has risen by about 8% this week and has taken us to this week's high at $24.35, below which we're currently consolidating. But again, here we're seeing a weekly close, which is positive for the first time in the past month. And for next week, our upside targets are the tentative resistance line going back to July of this year around the $24.60 mark. And then if we were to manage to rise above there, we could be heading towards the $25 mark and also head back up towards the July high at $25.26. In case of further retracements being seen, we've got pretty good support between the orange line here and the red line, the 55 and the 200-day simple moving averages between $23.57 and 35 cents. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is @AxelR_IG.